All right, perfect. So, we've spoken about many different topics, and just to kind of go over everything we've spoken about, right? We've spoken about candlesticks, how candlesticks open and close. We've spoken about trends and channels, how to confirm a trend, you know, identifying what happens usually on the fourth touch. We've spoken about channels, and we've also spoken about, the highs and the lows that define these channels, right? And then we've spoken about breakouts and fake outs. We've spoken about supply and demand. We've spoken about candlestick patterns, candlestick formations, and prior to that, we've spoken about Fibonacci retracements. Now, for every single one of you guys, this is a lot of information. The important thing is to dissect what needs to be dissected of the information. And as you guys continue getting better, you'll get to better understand each and everything. So one of the things that I'm teaching you guys is how to identify confluence, right? Identifying confluence is using 3 or more confirmations to help you make a better decision. So, some of you guys try to stress out the fact of, identifying Fibonacci levels or, identifying supply and demand zones. And it's very important you do. But again, it's not going to make or break your trading style, because the important thing is to take what you can understand and being able to develop enough confirmations behind it. Now, there's times when I have a conversation with you guys and I'm talking about, the buyers are coming in or the sellers are coming in, or, you hear other people in the chats talk about, that the buyers are having a hard time taking control. Well, when we were talking about candlestick patterns or candlesticks, just with the single candlesticks and the identification beyond them, we were talking about moral boozles, right? We're talking about the bearish and the bullish, right? Long body candle with no wicks. Those are candles that show the sellers are in control. So whenever you see us drawing a zone and we see one of these candles, well, that's signaling to you that buyers are trying to take control. Now, we've spoken about understanding with candles. The important thing is understanding what happens before and what happens after, right? We've spoken about how we can use a candlestick at a support or a demand zone or a supply or a resistance area, right? And how we can identify that as a possible signal of the market going up or down. Everybody tries to complicate themselves when learning the information. Remember the 3 pillars of success that we spoke about when trading, right? Which is understanding the information. Once we understand the information, we move on to identify the information. Once we move on to identify that information, we move on to actually applying that information, right? So it's hard to identify and apply something you're not understanding. And now for each and every one of you guys that have a struggle, let's say with identifying zones, remember, identifying a zone can be just as simple as, okay, I'm identifying a supply area. So my important thing is to look for what? The highest point where the market rejected. Perfect. So this was my high right here. And I'm just simply looking for my last previous high, right? So if this was my high, then my last previous high is going to be, let's say, up here. Now, guess what? Now I have one zone. Now, the important thing is, as you get good at identifying zones, you start to refine your zone identification. Maybe this is not the zone I want to focus on. Maybe it's this one right here. Well, guess what? I went from my high to some previous high, right? Or my high to the last previous high. And either way, it matches up, right? High, and this was the first high I identified. We have a zone here. Now, all we got to do is look left to confirm it. So when identifying a trend, what are we looking for? On an uptrend or a downtrend, we're looking for the resistance of that trend, right? 3 touches confirming a trend, 1, 2, 3. And on the 4th time the market approached that trend line, it broke it. What did it do? Kept going up. Now, the important thing is what? When we spoke about market structure now, right? Market structure being how to identify when the market changes trends, right? So if I was identifying the market structure, then I'm going to focus on what? If this was a downtrend and I want to see when it became an uptrend, I'm looking for the support of the last touch of that trend. I'm going to identify that touch. And I'm going to look for when the market respects that area and continues going up. Notice what happened here. In this area over here, the market just couldn't break and respect the area. It did, but what happened? This zone up here came into play and rejected area up here. So once the market tried 1, 2, 3, 4 times, it couldn't break. Notice what the reaction was. It dropped, respected, came back, dropped below, tried to bring it up again, right? Usually right here. When we get into a more advanced topic of trading, this right here is when the market tries to catch us sleeping, where they make us think that we're going back up. No, they're still going down. What happened? The market broke below, respected our zone, and it's been dropping since. So now, notice what happens here. There's a lot of touches here. So I'm just going to identify my zone here. And I'll change this color so we don't get confused. Identifying my zone here, noticing that if the market does break this area here, then I know what? That if I took my trade on a sell, that my area of attention should be this zone that I identified prior to that. Right? So now once we have that, guess what? This is a 500 pip trade that's a possibility here if it breaks the zone. So if I take this trade for a sell, right, 500 pips. On a 10-cent lot, that's $500. You know, I want you guys to understand that once we identify these opportunities, it's just a matter of taking advantage of them and taking them to the next level. So here, it's just a matter of putting it all together now, right? So today's topic, we're going to be talking about Elliott waves. So with the Elliott wave, what we're going to be able to understand is when the market, while it's trending upwards or downwards, will make its move, or its largest move, or its moves overall, right? So we spoke about, and I'm going to pull up a empty chart. Let's see, let's do GBP, JPY. So I'm going to go on the I'm going to go on the daily time frame. Delete all this. Perfect. So overall, we spoke about zones, right? So as always, my first job is to identify my important levels, my zones here, so that as the market approaches it, based off the past, I know what to expect. So the market broke below, so if this is from low to low, and this is an area to look for, right? I just drew these zones here. Now the important thing is to understand, based off of how the market moves up or down, this is where the Elliott wave is going to help you identify if the market's going to continue going up, the market is just retesting its area of breakout, or if in general the market will continue going down, or as we've learned with market structure, how to identify when the trend changes, right? So with Elliott waves, let's talk about the first wave, right? So in Elliott waves, there's something called an impulse wave. And the impulse wave is when the market is trending up or down, right? And what defines these impulse waves are the actual number in those waves. And all this is, for instance, when you hear me talking and I say, hey guys, we're prepping for the third wave. Well, that means that the first and the second wave already occurred, right? The first wave was the initial move, second wave, the retest, and now we're prepping for the third wave. It means that that's the next move to the upside, right? And if we ever hear me say, oh, now we're prepping for the fourth wave, well, that means that after the market pushed up, we want to see the market come back and retest that area. So overall, right, in the trends, when we talk about trends, if the market is trending upwards, how many touches confirm a trend? 3 times, right? Now, if we've looked at a trend here, we've seen what? That the first move to the upside is the indicator of the market beginning to move up, right? So we have 0 to 1. So as we have discussed, in the first wave is the initial move towards the direction of the trend. So if we're moving up, we have the first move going up, right? If we're moving down, we have the first move going down. Now, all this represents is that this is when a few traders think the market will either go up and start buying, or the market's going to go down and start selling, right? Causing the price to rise or drop, depending on which trend we're looking at. The second wave, this is when people start to take profit. Why? It's the retest of the breakout. They want to make sure that the market doesn't continue going down. So then we have after the breakout and the retest, right? Then we have the next move to the upside, which is the third wave. So as we've discussed prior to that, in general, first wave is the first move to the upside, right? First move to the upside. Wave number 2 is the retest of that breakout. Now, the third wave is the next move to the upside. So, okay, guys, if I see that the market is trending upwards, right? I see a potential. The market was trending upwards. Perfect. I'm going to identify my support so we can see it. So the first move is the market moving up, right? And we see that the market made its move up after, maybe it was trending downwards. So guess what? I identified my market structure, right? I know that this is, hold on 1 second, I did a bad example with that line. So we have the market trending downwards, right? And as we identify market structure, we notice that the market broke above our last lowest high point of that downtrend, right? So we have lower highs, lower highs, lower high, lower high, lower high, right? So now we got to respect that area. So if this was our first wave, if this is our first wave, then I know that to confirm that this market is no longer trending downwards, what do I need? A retest of that price area. So now let's say as the market was doing that, it faked out a little bit and then it broke above. Perfect. Now we have that opportunity for us to identify what? That no matter what, as long as the market respected our price area, which was the same price as the last lowest high of that downtrend, even if she faked out and started swiggling in and out, right? Now we have the next move, right? So now we have wave 1, and we just completed wave 2. Perfect. So now we have wave 1, wave 2. I want you guys to always remember, the strongest push in a trend is always either the third or fifth wave. If the third wave isn't a larger move than the first wave, then you can assume, or let's change the word, assess, that the fifth wave is the strongest push of that trend. So let me separate this. So again, The strongest push in a trend is always either the third or the fifth wave. If the third wave is not a larger move, and what I mean by a larger move is in terms of pips, right, or price. So this was 1,081 pips, right? If the third wave made its move to the upside, yeah, it broke past the first wave, but it wasn't a large move as the first wave was. Then you can assume after the market comes back and retests that same area, right, that the fifth wave can be the longest move to the upside. So let's go back to our slides. So how does this translate into what's actually happening, right? So we said that the first wave, this is when few traders think that the market's going to go up or down. So they'll either start buying or selling, causing the market to either fall or rise. The second wave is when people start to take profit, right, which causes price to fall and drop in price in terms of an uptrend. In a downtrend, then price starts to go up, right, because people are closing their sell positions and price starts to rise. So what happens? The next wave, I said that the third wave or the fifth wave is usually your strongest push up or down, right? This is because most people are realizing that the price retested that area and that the market is confirming our direction to the next point, which is now going to create a higher high in that uptrend, right? So we said earlier that in an uptrend, in an uptrend, we pay attention to higher lows and higher highs, right? In an uptrend, we focus on higher lows. In an ascending channel, we focus on what? Higher highs and higher lows, right? So now we have, let's say we have the higher highs and then we have the higher lows now. Well, once we created that higher high, which passed the first wave, and the market comes back and retests for the fourth wave, now we have an opportunity to take an assumption based off of what we're seeing in the market, that since that third wave was not longer, or let's say in this case it was, then this fifth wave is the next push up, right? And now we can see as the market is progressing what the opportunity is. So I want to show you an example of the Elliot wave going up and going down within a trend, and how you guys can also within that trend identify Elliott waves within those trends, if that makes sense. So real quick, let's focus on, let's focus on this move right here. So here's the market going up, right? So we had the market going down, we had the break, the retest, perfect. So we had the first wave up, right? Then we had the second wave, and we had the third wave, created a higher high. What did the fourth wave come and do? Retest. And then in the fifth wave, it created a higher high. So here's one example of one Elliott wave, right? So the question that most people say, JL, why did we do that? Well, simply based off of what we've learned in the past, every breakout needs a retest, right? So if we go, when the market broke above this level and she came back and retested here, notice how the market kept going up, right? So as we identify that opportunity, I'm calling this my first move to the upside, because the market originally dropped, then came up and confirmed that area before going up. So just like when we identify areas to place our Fibonacci's, we're also identifying the retest of that break level or fake out, confirming that we're going up or down. So this is one example of the market going up, right? Let's look for one where the market goes down. So as always, just gonna identify my zones. So this was my high, this is my previous high, perfect. So we had a fake out, we had a retest, perfect. This is my retest, so now I have what? One move to the downside at the retest. The next move, notice what happened, that because the market was unable to make a larger move from second to third, right? From 4 to 5, that move to the downside is larger. So if I would have never counted this wave as my first move to the downside, and I would actually waited for this retest here, then I can identify what? That after the retest, right? So if I adjust this zone here, so here's my breakout, here's my retest. Now we can start counting, right? 0 to 1, here's 2, here's 3, here's 4, here's 5. So you ask me, yeah, why didn't we count this? Because it didn't create a lower low. We're looking for lower lows, right? Lower lows and lower highs. Here in this sense, this is the same price as the first one. I want to see a lower low confirming that. So now once we have that, I have my confirmed trend to the downside. But now pay attention. You see how we identified this trend going down? Right? Let me identify the channel and the trend. Right? We had 1, 2, 3. The market on the fourth touch of the support of this falling descending channel, it broke it after the what? The fourth touch. 1, 2, 3. On the fourth touch, it broke it and kept going down. So you guys see how when we apply what we've learned with understanding trends, understanding channels, how we can confirm the trends and channels, and how we can confirm the Elliott waves. In the end, the most important things are the basics that we've learned, which is 3 touches confirm the trend, perfect. That confirmed that this downtrend was strong, right? We had 1, 2, 3 touches, perfect. But what happened was, because the market never came back and tried to take out the resistance of that trend, instead, because the market kept revisiting the support, yes, it was getting stronger in a sense, but the move to the downside was overall stronger. What's another sign? If we look at the candlesticks, and I erase this Elliott wave, what do we have here? We have a bearish signal in our face. 3 inside down, right? After the market failed to continue going up or break above, we had an engulfing bearish candle engulf the second candle. And on top of that, what happened before these 2 candles was that this candle was going up, and then the next 2 candles took out what happened. So when I tell you guys, it's important to understand what happens before and what happens after. Why we say that is because if we would have waited for this candle to close, now we have a break of the zone. And check this out. The market came, broke the zone, and kept going down. So overall, I want everybody to type 1 if you understand. Within a trend, we're using the Elliott waves to understand where the movement within those trends would occur. If you understand that, type 1. If you don't, type 0. Perfect. I'm gonna go one by one. Let's see. Brandon, how you feeling, man? Hey, Brandon, you hear me? Let's see, Mr. Daniels and Mrs. Daniels. How you guys translating the information?
It's good, it's good.
You guys understand exactly what we're talking, right? So,
Yes.
if you guys, if the fourth wave retested in the same price as the second wave, right? And the second wave to the third wave was not larger than the first wave, what is that telling you? That the fifth wave is
going to be bigger to push up.
It's going to be the strongest push up, right?
Mm-hmm.
So now that you understand that, it's always important, and I want you to write this down. So in a scenario where you identify that the market finally created that fourth wave, retesting the third wave, I want you to always pay attention to 2 things, okay? In this sense, I always want you to, 1, look for what happened before this trend, right? So if we identify what happened before, here's my downtrend. right? I want you to try and find to see if the market is confirming that that area is the retest of the last lowest high on the
Right.
fourth trend. If
Right.
the third wave was not the longest move,
Okay.
okay? Then that will confirm to you that we have a change of structure and that the market is going to make that strong push up, meaning that that would be your best buy entry.
Yeah, because I'm looking at you drawing the waves in there, and for
Mm-hmm.
me, I sometimes find it hard to actually see where to draw the waves in.
Mm-hmm. So
Um,
here, first things first, if the market was going down, right? We had the market going down. And
mhm,
notice that the market dropped and then it came up. If I would have started my first wave from making its move from the bottom,
mhm.
there's no true confirmation of that because I needed to see the market come back up and break above where that candle started.
Right.
So the first signal that the market was going up was what? This pin bar candle or this hammer at support, right?
Okay. Yeah.
And then what happened? If I looked what happened before, that candle is the same as the previous trend. And what happened after is that this is a bullish candle. So
Mhm.
this now gives me the signal that the market is going up, right? We have a 3 inside down pattern.
The inside out. Mhm.
So, okay, I have a 3 inside down pattern confirming that the market is going up. What am I looking for? What happens next, right? So if the
Mhm.
market broke back above this zone we drew out here, I just need to see the retest.
Right.
So once I have that retest, perfect. Now going off of what? Market structure, right? Here's my touches to my trend. This is my last touch. So this is the price I need to draw that resistance for. And
Right.
once the market breaks above that level and retests, I know that's my best entry. So look how many times the market retested that area, right? 1 and 2. Look how many times you had a chance to enter those trades on buys before she shot up.
Yeah.
You understand?
Mhm.
So once I would have seen this, now I know what. So if this is my first wave, right? Initially, what am I looking for? Where can the market stop above here? So if this was my highest point, my last previous high was up here,
Uh-huh.
right? Excuse me, do that too thick. My last previous high was up here. Then I need to see the market break my zone and the price of the last lowest high, come back and retest it. And when it breaks above it, right? If the
Right.
market breaks below the zone, it still needs to retest my what? My last lowest high point to confirm it's going above. If the market breaks below and retests it, then we know that the market's going to continue going down,
Mhm.
right? So if the market doesn't do that, cool. This is my first wave. The market broke that high. It doesn't matter if she breaks below my zone. As long as she holds firm that last lowest high price, confirming that the market structure has changed, guess what? The important thing is what now? What happens next, right? Once my candle broke above that zone, if I miss this entry, look how perfect this entry was.
Right.
And if
But
you guys want to measure in terms of pips, from here to here, this is 770 pips in 17 days. You know? So I show you guys this so you guys can see this is how the thought process works when identifying market structure and actual moves.
right.
So let me know if that cleared up your questioning in regards to where you can potentially place them.
It did. It did. So I'm really enjoying the last information you give in terms of the drawing the line for the trend and
Mm-hmm.
counting the touches and
Mm-hmm.
drawing the zone. So that brings a lot of clarity for me. So I think now that you just did that there too with the Elliot, I could see the whole structure coming together.
Correct.
So
And that's
it's
and that's what the whole point. That's what the whole point of piecing everything together is for. Because I don't want you to just. I don't want you to become a one-sided trader. I need you to learn how to put all the pieces to the puzzle.
right.
And it's crazy because I actually a few days ago I took a screenshot and I tried sending it to you guys but the phone service has been such shit. Where's it at? So this guy said, learning to trade is like putting together a 10,000 piece puzzle. And after countless hours of trying to put it all together, the final picture simply reads manage risk, right? So the important topic behind managing risk is once you have confluence here, right? Confluence meaning all signs are pointing to the market going up, then you can manage your risk a little heavier or a little lighter. And because you got the trade correct, all you needed for a better payday was a higher lot size.
Right, right.
You understand? So if it is $50 a day, if it is $100 a day, and you're trading 5-cent lots, and all you did was increase it to a 10-cent lot, guess what? You just doubled your pay because you understood what was happening, and throughout the whole trade, you were confident that this move was going to happen, right? And on top of that, the important thing is what? Confluence. Making sure that everything is tying up to what? We have one candlestick pattern suggesting the market is going up. We have a change of structure, right? We have a change of structure, and we have an actual Elliott wave to the upside printing out. You understand? So for you, this is what I want you guys working on, all right?
I have a question.
Go ahead.
I don't know if we had touched it. I think I have like 2 recordings to finish watch.
Mm-hmm.
But with the Fibonacci, you were doing an example earlier on there with the Fibonacci.
Mm-hmm.
When you're drawing the Fibonacci for the upside, do you drag the candle, the starting point from the top for the upside Fibonacci?
If you don't mind, why don't at the end of this class or before the class ends, I'll go over that. Just write that question down.
Okay.
So like that, we don't lose momentum on this topic, and then I don't confuse other people. But just write the question down, and I'll go over that with you before I end the class. But in terms of Elliott waves for now, Mrs. Daniels, are you feeling confident with what we're learning here, that you understand the concept?
Yes.
All right. Today in today's homework, when you do this, I want you putting this together in the sense of how I have it. So as we did, identify the trend, the previous trend, right? Yeah. And based off the previous trend, I want to see if you can line up your Elliott wave based off that. All right.
Okay.
Let's see. Conrad, how you feeling, man?
I'm feeling good. I like it.
Making sense to you?
Making a lot of sense.
Perfect. So remember what I'm saying here. So if we're identifying continuation of an uptrend or a reversal of an uptrend, right? The importance is to understand what happened prior to that uptrend, right? So being that we use this example here for the Elliott wave to the upside, right? We wanted to make sure that the market is confirming what we're seeing, right? So if I'm looking for reversals and the market was going down and now I wanted to see going up, first things first, identify my structure, right? Second, my zones. Third, where is my area that I need to pay attention to? So this is a perfect example here of a move to the upside where the market created a slider higher low from the second to the fourth wave. And it wasn't perfect, right? It didn't perfectly create an uptrend. But overall, if I look at this uptrend here from where the market stood above my trend line, but I had 1, 2, 3 touches, and I identify that point here, right? I can see here how many times the market came to revisit this after a struggle to break the zone here before she eventually just broke through. Now, she never retested my area here, right? In this time frame, in the sense, never retested my area here. So that tells me 2 things. I either have this uptrend a little off, right? Or that the market strength was so strong that it never came to retest, so that if the market starts to come up, this is a price area we got to pay attention to. But she could have dropped all of this as she did, right? Come back up, confirm that, and then make an even stronger push to the downside. All right? But the important thing is with Elliott waves, understanding what? When the buyers are coming in, when they're taking profit, when they're coming in again, when they're taking profit, how this just translates into breakout, retest, push up, right? If the third wave was not as strong as the first wave, then I know that after my fourth wave or my retest of my lower high of the previous downtrend, or after the market made its move up and it came low, that strongest move to the upside came in. That makes sense to you?
Yep.
Perfect. Do you have any questions for me?
No, I don't have any questions.
Perfect.
Yeah.
Let's see. How about you, Dean? Talk to me. And if Dean doesn't answer, I'll move on to Evelio. Evelio, how's it feeling for you?
A lot better than the Fibonacci.
Yeah, just remember, in Fibonacci, all we're doing is measuring the retracement. So if the market went up and it's starting to go down, we're measuring how far it can potentially retrace, right?
Okay.
On the Elliott waves, we're just understanding what the move of that uptrend or downtrend is doing, right?
Mm-hmm.
But overall, does it make sense to you, or are there any questions you'd like to ask?
No, this is a little bit better. I kind of, I feel more comfortable with this one.
Perfect. And if you do have any questions that come to your mind before the class, just write it down, and then when we ask questions again, we'll go over it.
Okay.
Let's see. How about you, Jeffrey? Talk to me. If Jeffrey don't answer, Joel. Señor Abreu.
Todo bien, bro. Todo bien. Chévere.
¿Va entendiendo de lo que vamos hablando?
Sí, claro.
And you see this example that I did here of how I measured this downtrend and how I was able to find that even on the fourth wave, it was also the retest of the last lowest high.
Sí.
Perfect. ¿No tiene ninguna pregunta?
No, tranquilo.
Perfect. All right. How about you, Jose?
Brother, we're good. We're straight.
Perfect. Making more sense to you?
A lot of sense, bro.
Awesome. How about you, Janelle?
I'm going well with repetition. I think it's all starting to finally sink in. Just keep repeating it, and I'll finally start to take it in.
Awesome. So I use this example with you as well. So you see how sometimes you enter a trade over risk, and you may enter it a little too early, and then the market will come back down and kind of like knock you out right before going in to the direction. Or maybe we entered it a little too early over risk, and then when it came back down, we had the opportunity to close with a higher profit, but we didn't. And then it probably hit a stop loss and then shot up.
Yeah.
This is what I want you to start applying to help you avoid those scenarios. All right?
Yeah.
Always make sure that you remember the key essentials. And I'll write it down for you here so that when you rewatch it, you remember. Always.
I like how this is a nice simple chart too. It's not full.
Yes, correct.
Yeah, it's much more simple than some of them.
Yeah, so remember, and this is exactly what I'm going to write here. Always find the structure, right?
Yeah.
So what I mean by that is find, if the market is going up, find what happened in the previous trend, right? And if it is in this trend, look at prior to that. But overall, find the structure. Second, identify your zones, right? And once you identify your zones and your structure, now we know what? If I know what my last lowest high point of this previous trend is, and I know where each of the previous touches were, right? Remember how we did the example when we were identifying market structure is that
Yeah.
if I were to take that zone that the market was creating on those touches, right? That I can identify areas of where to either get in or get out of my trade, right? So notice, these were my touches here. Excuse me. These were the touches of the previous trend. And notice how the first touch was the end of the fifth wave. And the second touch was where the market retraced to above, retested, and then dropped all the way. So always find structure, identify your zones, right? And then search for confluence. Okay? If everybody understands that, type 1. If you don't, type 0. I need to know that everybody's on the same page. And while we move forward, Yadan, how you feeling?
I'm good, bro.
Is it making sense to you? Is it putting the pieces in the puzzle for you?
Yeah, of course. I have never paid attention to the Elliot waves before because, you know, when you learn that, the people complicate it too much and you make it simple. And that's good
Yeah.
for me.
Yeah, so remember, I don't find myself using the Elliott wave that much because I'm always paying attention to the important retest of price, right?
Price action, you know. You mean?
Yeah, price action, correct. So if you don't see me identifying Elliott waves all the time, but when I do it, it just makes the picture a bit more clear in a sense, you know? Because now I know what to expect because I know that shit, the third wave did not make a larger move than the first wave. So after the retest of my last lowest high, and even though this uptrend's still intact, I know that this is my next strongest move, right?
Okay.
You know, I'll give you an example. Like when I was checking out gold, one of the reasons why I knew gold was going to hit 1400 and then shoot up was because on a larger time frame, that was the fourth touch, you know, the fourth wave. And with that fourth wave, the movement to the upside only made sense that it was going to be so strong, you know? So in the end, for those of you guys that are just getting used to identifying all this information, and even you yourself, Yadan, you know, it's good to label everything, but if not, just pay attention to the importance, right? Breakout of an important zone, breakout above the price where the structure showed me that if the market breaks above this price on that retest, I can confirm the market is no longer trending upwards, right?
Yeah.
And with the identification of the zones of the market touches of the trend, then I know where potentially the market can rise to or break above and continue going up that direction, or break below and continue going that direction. So that's the important thing. But as long as you're with me, you understand what I'm saying here as well. Always finding the structure, always identifying your zones, and then searching for confluence, right? What are we searching for? Confluence? What else is confirming all of this, right?
Okay, gotcha.
You got it, my brother. Let's see. Kurt, how you feeling, man?
Yeah, good, bro. Really good.
Making sense to you now?
Yeah, man, it's making a lot more sense.
Perfect. So now, with tomorrow's class, when we talk about tomorrow, all we're gonna do tomorrow, and I share this with you specifically, because I know you remember from our prior classes from when we first launched the school, we were talking about, you know, the 3-step system, you know, how to look at the time frames from the highest to the lowest so that we can develop a plan. So while all of this is starting to make sense, right, I want you to just understand all of this so that now that when we consistently apply it, I need my charger. Can you give me my charger? now that we start to apply all this, now we'll be able to develop a plan like, all right, I know that on the larger time frames, the market's going up. But in the near time frame, like the 4 hour, the 1 hour, and the 30-minute, I'm seeing signs of reversal. Why? Because on the signs of reversal, it's simply just a retest of a previous breakout area. Awesome. So now on the smaller times, like the 15, the 5, and the 1, it's printing. Yeah, it's coming down. And once it reaches this point, it's going to shoot up. Perfect. Now it all starts to make sense, all right? But is there any questions you have for us or no?
No, man. No, I just yeah, like Janelle said, just repetition and keeping
Yeah,
it
no
simple.
worries. This class is definitely recorded as well. So, if there was anything that you missed, I'll be sending the recording out as soon as we finish. I'm almost done catching up with all the summaries from the classes. Some of them got deleted when my computer had crashed on me. So I'm about like 90% done with all of them. So what I'm gonna do is I'm just gonna send all of them at once, so you guys can have that. But they're just gonna be written reviews of all this. So, to help you guys get better with the information as well. But if no one has any questions, let me go ahead and answer Mr. and Mrs. Daniels' questions about what was you guys wanted to talk about, the fib level.
Fib.
Yeah, so when we spoke about Fibonacci prior, we spoke about how in Fibonacci's, we mentioned how if the market was trending upwards, right? Let's say the market was going up. The market was going up. And the market started to come down. And then it started working its way up. These levels just represent the percentage of retracement from that downward movement, right? So as the market is going up, each level has a way of reacting when the market reaches that point and fails to break it, right? So one of the things I've mentioned to you, everyone, is the simplest way to understand Fibonacci levels is the higher the percentage, right, the slower the retracement. So notice that the market was going up and that the higher the percentage, the slower the retracement levels back down, right? Does that make sense to you guys?
Yes.
So what is that simply telling us? That as the market dropped and it started working its way up, if it failed to break the 23.6 level, then the important thing is to understand that and I'll write it down for you. After the 23.6 level, failure to break, I'll write it down, failure to break strong push down, right? 38.2, slightly. So we wrote for the 23.6%, if the market fails to break the 23.6% area, then you can always expect a strong push down. So let's say the market broke that 23.6 area, 0.6 area, and then it shot up to the 38.2, then I can expect a slighter strong push down. It's going to be a strong push down, but not as strong as the push down would be if it failed to break the 23.6 area. So let's say the market broke both these levels and shot up to the 50%. Now, with the 50%, the important thing is to understand the following, right? Failure to break the 50 area, we have to make sure that it does not break the support of this area here, the 0%. Because Because doing so, let's say if this was a zone here, and the market failed to break past the 50% area and it broke our zone here, all this could be is the market going down, coming back to retest, and continuing going down. Same thing goes for any of these percentages, right? So as we're paying attention to the importance of what we're seeing here is, the key thing to remember is that the higher the percentage, the higher the percentage, slower retracement back down, right? The lower the percentage, the stronger the push back down, or the stronger the push. Excuse me. So I don't confuse you guys. So again, I mentioned the 50, right? So if the market breaks the 30, fails to break the 38.2 and starts to retrace slowly, the market comes and breaks this support or this demand zone, then that can also signal a continuation. Just the difference now is that if the market fails to break the 23.6% and the strength of the push down broke that zone, what confirms that breakout, guys? The retest, right? So that's the important confirmation there, the retest, not the market breaking back in and then trying to go for the 38.2 and then coming back down and respecting it. And then this time it shoots up to the 78.6 and then slowly starts to retrace back down, right? This is how the market can move. But the important thing is what? To understand the concept that we're saying here. The higher the percentage, the slower the retracement back down. The lower the percentage, the stronger the push down. So if the market, again, failed to break the 23.6 area or the 38.2, and it started retracing, and at a strong force, it broke that support, came back and retested, then guess what? We're no longer on an uptrend. We're actually continuing to go down. All right? Does that answer your question, guys?
That's a good point you just made there, but I'm still confused as to if you're drawing it, where do you start? So if I'm going on an uptrend.
All right, so if we're going on an uptrend, we're always going on the retest of the confirmation. So rule number one, if I'm identifying an uptrend or a possible fib opportunity for an uptrend, what am I looking for? Where did the market confirm that the market was no longer trending upwards, right? So we're gonna go off here, right? So here's my uptrend. 1, 2, 3 touches to the trend, right? All these touches were fake outs. Perfect. This confirmed that the market was no longer trending upwards. I'll draw my fib level from what? From swing high to swing low, right? I drew it upside down, excuse me. Because this is the downtrend. So what happens? The market's moving up and start going down. So I tell you guys to draw it based off of one movement. Notice how many times the market shot down and came back up and shot down. The important thing is to understand what? If this isn't the fib area we want to draw, let's just simply identify what? The previous high. High, previous high, right? If it ain't this one, there's a previous high right here. The importance is to understand that as my market is trending upwards, that these levels are being respected. How? Just draw your zones from the prior. Right? Here's my 23.6% zone. Here's my 38.2 zone. This is way too thick. Right, here's my you see that? So as the market is doing what? It failed to break to 38.2. Look at the reaction of the market on the failure to break the 38.2. Strong push down, right? So cool. This is Daniels. We're going to combine this lesson with the last lesson. So the market shot up, failed to break. What happens? Now I'm going to identify my what? Here's my first wave to the downside, the retest, third wave, fifth wave. Notice what happened. The market couldn't break the zone here, right? What did it give us? A bullish pattern, right? Morningstar pattern. See how the Morningstar pattern printed here on the fifth wave and it couldn't break? What started happening? Market shot up. What do we have now? A potential Elliott wave, right?
Mm-hmm.
So I'll go from here. First wave, second wave, third wave, fourth wave. What do we have?
Ooh. See, I wouldn't do that. I wouldn't pull all the way up there.
Well, you're not amounting this decision off the moment, but that was our strongest push to the upside.
Okay.
You know, and even if this wasn't the retested area, this should be the retested area because the market broke our zone here, and we need a retest above the zone.
Right.
So, if I would have done my fifth wave from the 38.2 to the 61.8, well, here it is.
Mm-hmm.
You see?
Right.
But I just want to show you an example, right? We were looking at the market in this sense, right? From fourth wave, that's all we had seen. Most people would try to sell this. Oh, look, head and shoulders pattern. Failed to break the 50%. I'm going to sell this. Yeah, it dropped, but it didn't break our zone.
Mm-hmm.
And you saw instantly, once I started dragging price over, look how the market just shot up.
Right.
Okay? So I just show you this so you understand. In the end, what happened? The market tried to go above the 88.6, tried to go below. All it did was respect our zone here and broke above and kept going. What happened now? Important thing, right? Here's my 100% line. What happened? The market couldn't hold whatever price was up here.
Uh-huh.
Well, what does this turn out to be? A fake out, right?
Mm-hmm.
So where is the market? The market faked out of what? The 88.6.
Mm-hmm.
The 88.6 price, let's say, right? Once it faked out above it, came back down, retested it. Look how it never saw that price ever again. Started dropping, right? Now I'm gonna go off of my zones here, my levels. I'm gonna just extend this, right? Let me delete all this crap. So here it is. The market faked out of the 100, right? It broke above, couldn't hold that price. Broke below. Look how slowly she started retracing back down.
Mm-hmm.
All the way to what? To the 0.
0.
And then started trending back upwards. Where was it that she couldn't hold above? The 50%. See how she broke above, but then couldn't hold it?
Mm-hmm.
Respected it, started dropping, right? Notice where the ultimate retest occurred.
Yeah.
The 38.2. What was the reaction of the market? Push down.
Mm-hmm.
You see?
Mm-hmm.
So it can be complicated, but it's very simple.
Yeah.
The important thing is that we keep in mind that we always want to keep it stupid simple to the point where we can always continue to identify. All right?
Mm-hmm.
So Let me see. Does anybody have any questions in regards to what I just reviewed now too while you guys have the opportunity? Jose, were you going to say anything?
Yeah, it's a question not on this though, but more on the on Bitcoin on the chart. Because I have buys set up on that, and I'm trying to find a good place to set up a stop loss or one to account for the wick fiction. So I don't want to go to sleep and find this, down at like 11 or something. So I have a profit set of at like 11,740, and I got a couple of positions on buys.
I would say 11,100, maybe like $11,075 is like a little bit below the last lowest wick. So
11. Okay. So I was thinking 11 to like 11,290, but that might not be low enough because that we could probably catch some long ass wicks in there.
I probably could. I would feel more safe with 1175 because my next important area would be that 10,850 price route.
Yep. All right.
Perfect.
Thanks, well.
No doubt. Let's see. Conrad, you guys are good? Dean?
Yeah, I'm good.
Perfect. Starting to make more sense for you, bro?
Yeah, definitely.
How are you feeling? You ready to attack this week?
Yeah.
Let's get it, man. It's going to be a big week. We'll be trading this morning as well.
Okay.
Tomorrow's my daughter's first day of school here, so once I'm back, I'll set up shop so we can get to work.
I'll be in there.
All right, perfect. I'll see you guys tomorrow then. If no one has any questions, make sure before I catch. Janelle, you have any questions? Kurt?
No, all good here, bro.
Perfect. How about you, Yadan?
No, I'm okay. Thank you.
No problem. So I'll see you guys tomorrow. We'll be talking about the 3-step system.
Night.
All right, bro.
All right.
Great night, everyone.
Good night.
Good night, Aurelio.